How's it going, everyone? This video is going to be over an external and internal range liquidity model. So I'm going to focus on the relationship between internal and external liquidity, and then using a change in the state of delivery or order blocks to get me from one to the other. Now, the first thing we must review is what is internal range liquidity. Internal range liquidity is just a fair value gap. So here we have a bearish fair value gap, and here we have a bullish fair value gap. If you don't remember what a fair value gap is, please check out my video on fair value gaps. The next thing we have to review is what is external range liquidity. External range liquidity is just a swing high or a swing low. So now that we understand what internal and external range liquidity is, what is their relationship? Well, we expect price to move from internal to external and external to internal. So for example here, after we have purged sell-side liquidity or external range liquidity, I would anticipate price to move back into the range and go into internal range liquidity. Now here, after reaching internal range liquidity, if this is where we are going to form a lower high, this is where I'd anticipate price to move from internal range liquidity to external range liquidity. And so you can see we anticipate this relationship where price oscillates from external range liquidity to internal range liquidity, external range liquidity to internal range liquidity, or until we shift trend or have some other movement which breaks this and then it restarts. So let's take a look at the flowchart for this model. So the first thing I'm going to be looking for is a higher time frame bias. With this, I want to anticipate if I want price to move higher or lower. From here, I'm either going to be looking for internal range liquidity or a fair value gap to then trade to a high or a low or external range liquidity. Or I'm going to be looking for external range liquidity or a high and a low and trading into a fair value gap. Once I have that criteria met, I am then going down to the lower time frame, looking for a stop rate, a change in the state of delivery, and then I will be targeting just around a 2R trade, and this must all be done within a kill zone. So let's take a look at an example of this before we hop into TradingView. So here in this example, you can see we have a higher time frame, and let's say our bias was bullish. Here you can see we have swept out a low, and we have external range liquidity that has been taken. With our relationship between external and internal range liquidity, I would anticipate price to move from external range liquidity into internal range liquidity. With that bias, I can be looking for a stop rate on the lower time frame, a change in the state of delivery, and then look to get onside, reaching for that internal range liquidity and 2R. So let's hop into TradingView. So with our first example here, we have gold on the weekly chart, and you can see previous week closed over the previous. So according to my daily bias video, I could anticipate price to reach for its previous week's high once again. Now dropping down to the 4-hour time frame, let's see if we can get displacement towards our objective with a fair value gap or a sweep of a low. So here you can see we are reaching towards our previous week's high, and we do have a 4-hour fair value gap here. So now I'd want to see if price reaches back into that fair value gap. Here you can see price reaches back into that fair value gap. So on this time frame, our internal range liquidity would be this 4-hour fair value gap, and we have another swing high here, which would be our external range liquidity as well as our previous week's high. So let's go down to the 15-minute chart. So down here on the 15-minute chart, you can see we do have that sweep into our 4-hour internal range liquidity and looking for our 4-hour external range liquidity and previous week's high. So now going through the flowchart, we have had our stop rate. Have we had our change in the state of delivery? We haven't. We have not closed over the series of down close candles that has made this low. Let's see if price continues and can close over that. So price cannot go close over this before it makes a new low. So now with making a new low, this would not be our change in the state of delivery. With our change in the state of delivery, I'm finding the series or singular candle that made the low, and then if price closes over it. So this is now the candle that has made the low. So for a change in the state of delivery, I'd want to see price close over that. Do we get the closure? We do not yet, so we wait. Now with this candle here, we do have a close over the down close candle that made the low. So this would be my change in the state of delivery, looking to target my 4-hour external range liquidity as well as my previous week's high. Now with this, I can go ahead and take an entry because my entry is off of an order block or the change in the state of delivery. And then I'd be looking for my 4-hour sell side or my previous week's high. Now with this, I'd want to have my stop on the swing low, but you can see how this doesn't give 2R. So to meet that 2R minimum, I'll either have to extend my price target or move my invalidation. Now with this, I wouldn't really want to see price disrespect 0.5 of this down close candle's body. So I can put my stop a little bit higher up, similar to where a breaker block entry stop loss would be. Now as we let this continue, let's see what happens. And there we go. Now if you noticed, once we swept out another low here, and then we closed over this down close candle, that would be the propulsion block. But you can see we get 2R. So to review, we use the weekly candle closing over the previous to anticipate a continuation of this trend higher. Then we use the 4-hour reaching into its fair value gap or internal range liquidity and looking to target external range liquidity and previous week's high. From there, going to the 15-minute chart, and then on the 15-minute chart, looking for that change in the state of delivery in that internal range liquidity, going to target that external range liquidity. So let's hop into another example. So here we are with our next example. And if you're taking a look at the daily chart here on the right, you can see we have swept out our daily low and we have closed back inside the range. So with this, I could be bullish on the following day. So you can see here as we get into the following day, do we have any fair value gaps or lows we can sweep out? So we could sweep out this low, but then that would invalidate the idea as that would be taking out the daily low we anticipate to hold. So do we have any fair value gaps? We do, right here. So as we reach into this fair value gap here, we have our internal range liquidity, whereas our external range liquidity would be this high as well as this high, or those equal highs. So with this, I can drop down to the 5-minute time frame. Now with this, I'd be looking for a change in the state of delivery on this 5-minute time frame using the hourly internal to external liquidity. Now with this current move here, you can see it is not clean. We don't have a clean series of down close candles. So generally what I do here is I just use this whole move. So we have this large down close candle and then the continued move. I can just use this as my change in the state of delivery. So as we move forward here, we get this close over here. So now confirming this as a change in the state of delivery. So I can look to get on side with this. Now if I was going to enter on this close, my stop on this low, that doesn't really make sense in terms of risk to reward, right? So in this case, I would have to wait for a retest to then look to get long again. So you can see we then take out our external liquidity. So this is one of those scenarios where if I have a strong bias that price is going to trade higher, I can still anticipate this to support price higher and trade that higher. However, if I'm lacking that strong narrative, this is going to be something I want to avoid because now I have taken out this buy side liquidity and I'm either going to look for internal range liquidity or the other side of the range. So let's see what happens if we were to approach this with a strong bias. So you can see we're getting a consolidation here. Now we are sweeping out the low of this consolidation. Let's see what happens next. Now we are getting a reaction out of the mean threshold of this series down, right? The upper half of this is supporting price higher. So this is where I could look to get on side with the move higher. Or if I want to wait for more confirmation, I would wait for a series to form here or another order block formation or a propulsion block. Here you can see we get this closure. So if I wanted to try this again, I could enter, have my stop on this swing low because that is below the mean threshold of this, which would I anticipate not to be reached with a propulsion block. And then I can look to target 2R. Now, like I said, this only really makes sense if I have a very strong narrative or bias to the upside, as I would not anticipate this to hold if I was wrong and price was just to range. So let's see what happens. And you can see there we get that retest of the propulsion block. As we let this continue to play out, we get a move higher for our 2RTP. Now let's go back out to the hourly time frame here. So you can see how that worked. We had a move into our hourly internal range liquidity, and then we reach out and close over our external range liquidity with the anticipation we trade higher from the daily chart. Now, if this trend is going to continue where we are forming higher lows and higher highs, then I would anticipate a higher low to be formed somewhere. Do we have any sort of fair value gap in this range? We do. So let's see if price retraces back into this area. So here you can see we do not reach into that fair value gap. We actually just make equal lows. So let's see if we can reach back into it. And here we reach back into it. So if we are going to trade higher and form once again a higher low to make a higher high, we would go internal to external liquidity. So this would be our target. So now back here down on the 5-minute time frame, where would be our change in the state of delivery? We find the low, we find the series of candles that made that low, and then I mark out the opening price in that series. So I would need a close over this to continue higher. So here we have a close over. Now this is a little far from where I'd want to take an entry, so I can always wait for a retest and place a limit order, like so. Or I can always wait for the retest and then get a continuation entry. So as we let this continue, here we'd get tagged in. Where would be the continuation entry? It would be right here, as we have now validated this low. So we could take a new entry there with my stop on this low, targeting 2R. So let's see how these work out. So you can see the first one would have hit TP there. The continuation entry would have hit TP there. So going back to the hourly time frame just to review, and we will clean up our drawings here to make it make sense. In a bullish trend here, I'm anticipating price to make higher lows and higher highs. So when we make a high, higher low, I'm anticipating a higher high and then a higher low. And you can see as this trend continues, it's going from internal range liquidity to external range liquidity to internal range liquidity to external range liquidity. Hopefully that makes sense. Let's get into another example. So here we are in another example. If we're anticipating this trend to continue and we are forming higher lows and higher highs, and we get a retracement here, I'm anticipating price to react in the internal range liquidity and then reach for external range liquidity. So as we let this continue to play out or reach into that internal range liquidity, you can see we are respecting this fair value gap. So let's drop down to the hourly time frame. So now that we have determined a bias from our higher time frame trend, and we have an internal range liquidity on the daily chart and external range liquidity on the daily chart as well, do we have that change in the state of delivery on the hourly chart? We do, right? We find the low, the candles that made that. We can either use this or that. I would prefer to use this one. And so then now I'm anticipating price to continue to trade higher off of this. So there's kind of two options here. I can take an entry with where I would need my stop below 0.5 of this, or I can wait for a new formation or a new entry to form in this next candle to trade it higher. So where would that occur? Well, I'd want to see if we either sweep out a low or reach into a fair value gap. Currently, we just have this low here. So let's see what happens. So now that we have swept out that low, I would anticipate price to trade higher towards this external range liquidity. Have we formed a new order block? We have, as we've closed over the down close candles that has made this low. So from here, I can look to take my entry, put my stop on this low, and I can target 2R or hold runners towards our external range liquidity. Here you can see 2R gets hit, and then we have another retracement into internal range liquidity, back to external range liquidity. And as we let this continue, you can see we go and reach that daily external range liquidity. So as we give another candle here on the daily chart here, you can see we reach into this fair value gap here on the daily time frame. And then we go and reach our external range liquidity or this high on the daily time frame. Hopefully that makes sense, and I hope you enjoyed this model. I find it very simple as you only have to determine a few things, and it is fairly mechanical in its process. If you did enjoy it and you do want this PDF, be sure to check out my free Discord as it will be located there. I hope you have a great rest of your day, and I'll see you guys next time.